Every week, I get calls from business owners asking me the same question. They submitted their SBA application weeks ago, maybe even months ago. And now they haven't heard anything. And then they ask me, Zach, what is actually happening here? Is this normal? The answer is yes, this is normal, but only if you understand how the SBA process actually works. Most borrowers go into this application process thinking it's like applying for a credit card. Submit the application, wait a few days, get an answer. But SBA loans are inherently different. They are not fast, they're not simple. And if you don't know what's happening week by week, the waiting will drive you crazy. In this video, I'm gonna walk you through the real SBA timeline. What's happening in week 1, what's happening in week 2, and what's happening in week 7 or 8. And why understanding this process can save you from making the mistakes that slow everything down. This is a roadmap I wish someone had given me when I started in this industry. Before I walk you through the weeks, let me give you one thing that'll change how you think about this entire process. SBA loans move through multiple approval layers. It's not one decision by one person. It's a series of decisions by different people at different stages. Understanding who's reviewing what, when, will help you manage your expectations and give you the context you need when your lender gives you updates or doesn't. There are 3 main phases in this journey. Pre-approval, where the lender decides if they want to send your file to the SBA. SBA review, where the government decides if they want to back your loan through that lender. And closing, when the paperwork gets finalized and the money moves. Each phase has its own timeline, its own requirements, and its own potential delays. Let's get into it. Week 1 through 2, initial lender review. The first thing that happens after you submit your application is absolutely nothing. Not because your lender doesn't care, but because they're waiting for your complete file. Most borrowers think they submitted everything when they hit send on that initial application. But what you submitted was simply an application. It was not a complete file. In week 1 and 2, the lender is collecting the rest of what they need. Personal financial statements, business and personal tax returns, debt schedules, financials, bank statements, lease agreements, purchase agreements if you're buying a business. Here's what borrowers don't realize. Incomplete files do not get reviewed by head underwriters. They sit in a pending folder until everything comes in, and then it gets packaged and sent to a senior underwriter. This is why some applications seem to disappear for weeks. It's because the lender isn't reviewing a partial file. They're waiting for you to complete it. Your job during these first 2 weeks is to respond immediately to every document request that the SBA approved lender makes. Speed matters more than perfection at this stage. You need to be very responsive so that the lender knows that you have your stuff together. Week 3 to 4, lender underwriting. Once your file is complete, it goes to the lender's underwriting team. This is where the lender decides if they want to put their name on your deal and send it to the SBA for backing. Most borrowers don't realize that lenders actually have to approve you first before the SBA ever actually sees your application. During this phase of the loan process, the underwriter is usually running credit, verifying income, checking collateral values, and making sure your deal fits SBA guidelines. They're also checking your debt service coverage ratio, making sure the business's cash flow can support the new payment that is going to happen when the SBA loan funds. And they're verifying that the use of funds qualifies for SBA backing as well. If the underwriter finds issues, they'll send you conditions. These are requests for additional documentation or clarification on documents that you've already submitted. How quickly you respond to the conditions the underwriters send directly affects how long this phase takes. I've seen deals that should have taken 2 weeks in this phase stretched to 2 months because borrowers didn't prioritize responding to the conditions that they were served with from the SBA approved lender. And then, before you know it, the bank closes out the file due to inactivity. The other thing that happens during this phase is the bank's internal approval process. Even if the underwriter likes your deal, it usually has to go through a loan committee or senior approval. This can add a few days to a week, depending on the lender's structure. Week 5 to 6, SBA submission and review. If the lender approves your deal, they package it and send it to the SBA. This is where many borrowers think the real waiting begins. But actually, the SBA moves faster than most lenders do a lot of times. The government has service standards that they're trying to hit, and in most cases, they do stick to them. For deals under $500,000, the SBA target is 10 business days for a decision. The larger deals, it's 15 business days. That's not calendar days, that's business days. So factor in weekends and holidays not counting. During this phase, the SBA is reviewing the same thing your lender already reviewed, but from a different angle. The lender cares about their risk. The SBA only cares about program compliance for the most part. They're making sure the loan meets SBA guidelines, and that the borrower qualifies for SBA assistance, and that the use of funds fits the program requirements as well. The SBA can approve, decline, or in most cases, send the loan back to the lender with questions. If they have questions, that adds time to the process. But it doesn't mean your deal is dead. It means they want clarification on something specific, more conditions. Week 7, SBA decision and conditions. Once the SBA makes a decision, your lender is going to contact you with the results. If you're approved, you'll get what's called an SBA authorization. This is not the same as loan approval. It means the SBA agrees to back the loan if you meet their conditions. Most SBA authorizations are going to come with conditions. These might include updated financial statements, proof of insurance, or environmental reports for real estate. The conditions aren't roadblocks per se, they're boxes you need to check before closing. I've seen borrowers celebrate from the SBA authorization and then take weeks to satisfy the simple conditions. Don't do that. Treat conditions like urgent priorities and knock them out immediately. Week 8, closing preparation. Once SBA conditions are satisfied, your file goes to the lender's closing department. This is where they prepare loan documents, order title work if there's any real estate involved, and coordinate with attorneys or closing agents. The closing timeline depends on the complexity of your deal. If you're refinancing existing debt with no collateral involved in the deal, closing might happen in a week. If you're buying a business with real estate and equipment in the deal, closing might take a month. During this phase, you'll review loan documents, sign the paperwork, provide proof of insurance, and wire any required equity injections as well. The lender coordinates this process, but your responsiveness still matters a lot. Now, the timeline I just walked you through assumes everything goes smoothly, but there are variables that can actually speed things up or slow things down significantly. I've had SBA loans close in 3 weeks. I've had SBA loans close in 3 months. The biggest variable is lender experience. SBA preferred lenders who do a lot of SBA loans can move faster because they know the process. Community banks that do 1 SBA loan a month take a lot longer because they're freestyling and they're learning as they go. Sometimes non-bank SBA approved lenders will actually go the fastest because they're not worried about depository accounts or lending out the money on real estate and other conventional loan deals. They're only doing SBA loans a lot of times. The second variable is deal complexity. A simple working capital SBA loan moves a lot faster than a business acquisition with multiple properties involved in the deal. The more moving parts your deal has, the longer each phase takes. The third variable is borrower responsiveness. I cannot overstate how much this matters. Borrowers who respond to document requests within 24 hours close weeks faster than borrowers who take their time. Borrowers who take their time end up needing to start the SBA loan application process over and over again because banks will close out files due to inactivity so that they can allocate their resources to files that are actually moving. And the last variable is timing. SBA fiscal year end in September creates delays because volume is higher. Holidays can slow things down. Summer vacation schedules slow things down as well. Make sure to plan for these factors if your timeline is critical. Here's the bottom line. A typical SBA loan takes 45 to 90 days from complete application to funding. That's not 45 days from when you first contacted the lender either. That's 45 days from when your complete file gets submitted for underwriting. If you're thinking about an SBA loan, start the process early. That's the one thing that I would recommend. If you're already in the process, be responsive and patient. If you want help navigating this process or figuring out if SBA financing is right for your situation, we can walk through that together. The link below this video is for a free call where we'll review your deal the same exact way an SBA approved lender would. We'll tell you what to expect, or you can call us directly at 888-859-8208. Don't wait until you need the money to start the process. Start now while you have the time to do it right.